Okay, very ugly indeed. The Dow's now down more than 600 points, as you say, on the Nasdaq, down more than 4%. S&P 500 down 2.9% to level 2661. Kenny Polcari from O'Neill Securities joins me on the floor. What was the key level that sparked this? It was in your morning note this morning.
It was in my note. I said if we failed at 2710, which was the low of last week, that we were going to test yesterday's low at 2690, which we did. We sliced right through it. The minute you did, you get all the risk management software kicking in, creating the sell orders, and you saw how it fed on each other. The minute we broke through that level, we traded right lower. We'll close them right on the lows of the day.
2656 on the SPX. What's the next level?
I think it's 2650. That's where I think you have to look. So
okay.
Another 16 points from here on the S&P. And we could get there in the next 3 minutes if it stays like this.
I just want to go broader markets, Kenny. How many days have you experienced like this? We're down more than 4% on the Nasdaq.
Listen, I've been here 38 years. You really want to ask that question?
Yeah, no, come on. This is a 1 in 20 day of your career?
Yeah, no, it doesn't happen like this all the time. But we've had a major move over the last week and a half, right? We're down 10% on the Dow in the last week and a half, right? Okay. And so it's been a very, very tumultuous time. But look, part of it, I think, is part of the correction. Part of it is certainly all the issues surrounding, and don't discount the geopolitical issues. That is absolutely weighing on investor mind.
Kenny, it's always a pleasure. Thanks very much. So 2650, his key level. That's only 6 more points lower now as we approach the close. Let's have a look at that S&P 500 intraday chart. There was a moment of green there about 7 minutes into trade. Clearly, you can see steady selling throughout the day since then. What does it mean for all 4 of the indices? We just mentioned Nasdaq down 4%, down 600 points or so, 2.5%, over 3%. For the S&P. I'm going to bring in Bob Pisani. We're going to switch and show a half screen of how the international markets closed today. A hell of a lot better than they have here. Bob, main takeaway.
Remember, the stock market is a discounting mechanism to understand a stream of future earnings. When we're in the fourth quarter, the market is trying to figure out 2019 earnings level. We've said time and again they're expecting decent numbers in 2019 on pretty good U.S. economy, about 10%. The market is acting like those numbers are suspicious. The market is acting like those numbers could be half of that, about 5 percentage points gains. That still would be healthy, but that's not what the market is expecting, and it's adjusting downward. Obviously, it's on the China growth story and on the Treasury yield story.
And I think our sector board isn't there, but very much energy, as you said, tech, communication services down sharply. We've got the dollar for you as well, seeing a spike up in the dollar. That's a continuation of a recent theme. That does not help. And as we approach the close, we are down 2.5% or so, over 600 points on the Dow. The S&P down over 3%. The Nasdaq down over 4%. A very ugly day. A very ugly final few hours of trade. True Blue rings the bell here at the big board. First Savings Bank rings it at the Nasdaq, down 3.1% on the S&P. That does it.